It was a tough period, and a lot of this was really down to pricing discounting, right, because of various grades of ore. How do you plan to address this?
Well, Heidi, it's actually, we were really pleased with the result. We delivered 170 million tonnes of iron ore, and we actually delivered an underlying net profit after tax of $1.1 billion. So, and a strong result. We had a 62% dividend payout ratio, so our shareholders really benefited from the strength of the company. In the context of our strategy moving forward, we do have a strategy to release a new product called West Pilbara Fines. That'll be a 60.1% iron content product, low alumina, so it'll actually add to our overall product suite. That product will be released in the second half of this financial year, and then with our Eliwana Mine and Rail project, which is a $1.3 billion capital investment, that'll come online in December 2020, and that'll add to our ability to produce this West Pilbara Fines product.
60%, still short of 62%, which is benchmark. Would that be enough to meet the demand?
It'll be a very highly sought after product. So we've been speaking to our customers in China. Our existing products are very well understood. They offer high value in use, but the release of a 60.1% product, particularly with the low alumina, will be highly sought after in the market.
In terms of demand for China, that sort of higher end has been largely due to these stricter environmental standards and emissions controls and such, and that's really projected to continue into the second half. As we get into that key winter season, do you see your product coming online quickly enough to be able to take advantage of that period?
Well, I think what we're seeing is that the environmental controls certainly are a structural element of what we're seeing in China. But also the steel mills are currently enjoying very high profitability, and the high profitability is what's really driving that demand for those higher iron content ores. We know that steel mills are very sensitive to their cost of input, so if that profitability comes under any pressure, then we would actually see, we think, very strong demand, and importantly, the spread in prices start to narrow. So our product will come out in the second half of this financial year. In the meantime, we're selling every single tonne of iron ore that we produce, and we're generating very strong margins on that iron ore.
And you expect that to continue, given expectations of what we already are seeing in a slowdown in China economically?
Well, we're actually seeing steel production reach record highs. So the annualised rate of steel production over the last couple of months has been about 950 million tonnes of steel. Last year, the annual rate of steel production was just over 830 million tonnes. So we are actually seeing in China that there's been a lot of activity. Some of that might be seasonal, and as we go into the full year, we actually expect to see steel production slightly ahead of last year. So we're still seeing very strong demand for iron ore and for bulk commodities more generally.
The other major uncertainty, we can't let a conversation go by without talking about it, but the trade tensions, the trade uncertainties, how much, if at all, does that kind of weigh into what your industry is contending with at the moment, how that impacts on your business?
Well, China produces 50% of global steel, and of that, only about 1% is directly exported to the United States. Now, there is some steel that is exported to other countries that may end up ultimately in the US, but our view is that most of the steel that's produced in China is consumed domestically. China's also very focused on the Belt and Road Initiative, which provides additional stimulus. So our expectation is that the trade war will not have a direct impact on steel production in China. Having said that, history has demonstrated that protracted periods of trade protectionism are not good for global growth.
Geographically, you've talked about diversifying away from China. What's your second most key market at the moment?
Well, we saw really good increases in our sales to non-China markets, and that was across the board, actually. We saw a lot of growth coming out of India, and last year we doubled the amount of sales to non-China markets, but that is throughout Southeast Asia. So for some time we've been predicting that as the rest of Southeast Asia also invest in steel-making capability, invest in infrastructure, and those emerging economies start to develop, we will see demand through the Southeast Asian more broadly. But India has certainly been a key market for us in the last 12 months.
And I know you're very closely monitoring developments in steel mills in Indonesia, Vietnam.
Yes. How
soon do you think that will come online for demand?
Well, we're seeing those steel mills being built, and we are talking to them as potential customers. So there's a little period of time yet. But as I said, we are already selling to Japan, to Korea, and certainly to India. That's been a key market for us.
How quickly do you expect the introduction of the new West Pilbara Fines product will start showing up in your bottom line?
Well, that product will be launched in the second half of this financial year from our existing operations. We'll get to full run rate once we deliver on the Eliwana project. But it also importantly maintains our low-cost status. So this is not about introducing a product that changes our cost profile. By retaining that low-cost status, introducing a product that will extract an additional margin in this current market, that'll add to our bottom line.
I think it was last year that your chairman, Andrew Forrest, had said that the goal is to get to above 60% for majority ore output. What's the time frame for that? How close are you?
Well, the time frame for that really is dependent on the Eliwana project, and that project, first ore on train, is scheduled for December 2020. So in our fiscal year 21-22, that's when we would expect to see full production from Eliwana.
Growth, acquisitions. You recently took a small stake in another producer. Does that kind of give us an indication that, this is live, the idea that other acquisitions or deals may be on the table?
Well, our key focus for growth is actually on exploration activities. So we are currently exploring for other commodities in New South Wales. We also have concessions in Ecuador. So we have 32 concessions in Ecuador. We've been in country there for 12 months and we're just about to start a drilling program. And that area is prospective for copper and gold. So we've been working with community and government and we expect to start an extensive drilling program. We've got very strong competency in exploration, and we see that as a very good way to unlock significant growth. When it comes to acquisitions, we have taken a stake in Atlas Iron because we have confidence in the long-term fundamentals for Pilbara and for the iron ore sector more broadly. But our key focus has been on exploration as a way of unlocking growth.
There's also been the desire to diversify away from ore as well. I mean, in terms of the internal conversations that are going on, when do you expect a commitment to something and what metals would you be looking at?
Well, we are committed in the context of our exploration activities. So the exploration that we're undertaking here in New South Wales and also in Ecuador, both of those are drilling programs that are focused on copper and gold. So those are the commodities that we're currently undertaking those drilling activities.
You've also got a former rugby star in Argentina to help lead work in Ecuador, in Argentina, Colombia and Ecuador, some of these other streams. I mean, I guess at what point do you see potential new projects being solidified out of these exploratory streams?
Well, the thing about exploration, Heidi, is it does take some time. Yeah. So, look, in Argentina, we have established a presence. We have an office now in Quito, in Ecuador. We've established a presence in Argentina. We're ambitious for growth more broadly. And Argentina, again, is very prospective for copper, gold and for lithium. And we are working with a number of people in country who have very close connections throughout the country, both in business and government, to help us to drive our ambitions for exploration activities in those countries.
I think we last spoke maybe a year or a year and a half ago, and at that point, the Chinese economy was still pretty much going gangbusters, very resilient growth. We've seen a little bit of a stumble in the most recent months and a lot of uncertainty. Has that driven you to, I guess, a more pressing need to diversify and to diversify quicker?
No, it's part of our existing strategy, and we've actually seen in China that steel production's been very strong and that continues to drive demand for seaborne iron ore. So whilst I agree that there's been some slowdown in other areas of the economy, infrastructure and real estate has actually remained strong, and we have seen very robust steel production in China. So we're on a strategy, we're on a journey. We think exploration is the way to unlock significant value, and we'll continue on our path with that.
In terms of future opportunities and geographies and markets, is there anything that we haven't mentioned, that you haven't flagged, that you are looking, or is the world your oyster?
Oh, look, the world is our oyster. When you're in mining and you look at around the world, there are opportunities. There is actually not that many new projects coming on stream for copper, for example. So there are some significant copper resources around the world that are potential opportunities for the business. At the moment, we're focused on South America, but that doesn't mean we won't look at other jurisdictions and other geographies at the appropriate time.
Elizabeth, it's been an eventful morning before you came to join us. To a certain extent, I think Australians are used to this kind of revolving door politics. How impactful would a change in government be for your industry, and is that something that you'd be watching out as a risk?
Yeah, look, I think for business, what we need is clarity. I think the leader of whatever party is a matter for that party. But for business, when we're making significant investment decisions, as we just have recently done with the Eliwana Mine and Rail project, that's a $1.3 billion US investment in Australia, we need to have some clarity in terms of policy. And it's really important for those long-term investment decisions. And if we have that certainty, we can make those decisions, and that's good for jobs and it's good for growth.